Governor Lowe. Peter Ryan from the ABC. Thanks for your address today. Just a question about the mortgage cliff. We have hundreds of thousands of borrowers facing this cliff, which is looming in a few tranches over the next year or so as those fixed mortgages move into that higher rates world. Do you see that as an emerging shock down the road? And what role did that play in yesterday's decision to pause rates at least for April? And also the pressures, particularly on low-income families who might have bigger mortgages compared to their incomes. What sort of data does the Reserve Bank collect from charities, for example, Lifeline, that are really dealing with families that are going to the wall and even thinking about how they're going to pay the supermarket bill?
Yeah, the first part of the question about the mortgage cliff, I don't like that, the cliff analogy, because this is not a cliff. It's kind of a ramp up. I mean, a lot of people have already transitioned who had fixed rate loans to variable rate loans, and the banks tell us that people who've already transitioned are performing as well with their mortgages as the people who had variable rate loans. And we've got to remember that many of these people who've had fixed rate loans for 1, 2, 3 years have paid much, much lower interest rates than the rest of the community for that time. And some people I know, because they write to me and they say, well, we've saved the money. So we don't like paying the higher interest rates on the variable rate debt, but we've saved some of the money because we've been paying low fixed rates. Other people have used the low fixed rate to kind of spend for their household and going to face a difficult adjustment. But the fact that they've known for some time they have to pay higher rates. Most people are sensible. I think have been planning for it. It doesn't make it easier, but they've been planning for it. And the banks tell us that they're working very carefully with those customers. They make the transition, and there's been no deterioration in the credit quality of those borrowers. So this hasn't come as a kind of a surprise on day one. This increase in interest rates has been coming for some time. So people have had time to plan. What contact do we have with the financial counsellors and others that through our liaison program we talk to them, and they tell us that at the moment they're getting increased calls for people saying they're in stress. And a lot of those calls, interestingly, are coming from people who rent, at least as many at the moment. So rental stress is at least as big an issue at the moment as mortgage stress. And in the coming month, I'm meeting with a number of the service providers in this area to hear the stories directly myself, and quite a few Australians write to me telling them the very difficult situation that they're in, and I read those letters with a heavy heart. But when I read them, I think, what is the alternative? If we didn't put up interest rates, what's going to happen? Inflation will stay high, interest rates will have to go higher later on, and there'll be more unemployment. So at the individual level, it's very difficult. But this rise in interest rates has been necessary, and if we didn't do it, then there's more pain down the track. So it's a hard message, but it's the truth.